Hello, my friend. You are welcome to my YouTube channel today again. I remain your host, Olajide. Today, I want to share with you what I have called the hedging techniques for crypto trading for beginners. The hedging techniques for crypto trading for beginners. Now, what is hedging techniques in trading? Hedging techniques simply means a risk management strategy that traders adopt to offset investment losses. A risk management techniques or strategy that traders adopt to offset investment losses. So, I'm going to be giving you 4 of this. But before I go on, I want to encourage you to smash the like button, subscribe to this channel, and share this video with as many of your family and friends that will be interested in listening to this. Okay, having said that, let me go on. 4 out of those strategy. The very first one I want you to understand is what we call 1/3 strategy. 1/3 strategy. Now, what is 1/3 strategy? 1/3 strategy is actually talking about is centered around your capital. Don't forget, in my previous video, I told you that you must determine the amount of money you are bringing into this space. Now, let's say you are bringing in 20,000 naira to invest here. As a day trader now, I'm focusing on those who are day trader here. What you do is that you divide your 20,000 naira into 3 parts. That's into 3 parts. When you divide it into 3 parts, now you will be having like 7,000 plus on each part. Now, the first 7,000 plus that you will take is what you are going to now introduce to buy and sell. Buy and sell in the market. In the process of your buying and selling, you may buy the first and sell in profit, buy the second and sell in profit, buy the third and sell in profit. By the time you are buying the fourth, the market, you buy and the market go down, what we call dump on you below the price that you have bought. Now, at that point, you hold on. You wait for the market to return. And if the market fails to return, and it goes deeper and deeper, what you now do is that first part of your money that you have invested, that you have used to buy, that you have not been able to sell, you leave it because that asset will have reduced in value. So you leave that money there, waiting for the market to return. But you are not going to, because you have not reached your daily target. You then bring the second part, another 7,000 plus. You bring it, you introduce it into the market at the level that the market is now. You introduce it. When you introduce it into the market, you continue to make profit by, as the market is going down and coming back, coming up, going down and coming up. You are buying, you are selling at that level. Now, there is possibility that the market bounce back and higher than the first that you have bought. At that point, you quickly sell that one off and you return this one that you have taken and you continue to trade like that. And if while you are using the second part of your money, the market goes down again, don't forget this is a volatile market. The market, no matter how deep it goes, it will definitely bounce back. So if it goes beyond that, you leave that second part too in that market because your coin has depreciated at that point. So you bring in the third part and you use it to continue to trade until the market. And if peradventure the market goes deeper, you hold on. All your money is now tied in the market. Just wait for the market. The market is definitely going to bounce back and you are going to make profit on all of those. That is what 1/3 strategy is all about. Now, imagine if you have introduced your old 20,000 naira at the first instance. It means that when the market goes deeper, you don't have any capital to take advantage of that particular region of the market. So you only be waiting for the market to bounce back and you sell in profit, or rather you sell low. Now I move to the next techniques. There's what we call BLSH. BLSH. That is buy low and sell high. That is one strategy that you need to actually trade these markets. It is one technique that you need to trade these markets. Buy low. What that means is that when the market is dumping, that is when you come into the market to buy. When the market is dumping, you look at the market when it has reached a point that it wants to bounce back, you can come into that space and buy. And when you buy at that point, when the market bounce back, you you sell. You sell. Don't forget you must have determined the percentage profit you want to take on each of your trade. So you buy low and you sell high. Don't forget that. You must have that at the back of your mind. In fact, you have to repeat and say that to yourself again and again. I must tell you, it will pay you in the long run. The next is what we call SLBBL. XLBBL. What that means is this: sell low, buy back lower. Sell low, buy back lower. Sell low, buy back lower. Now, what does that mean? And how does that apply? Don't forget, I explained to you your 1/3 strategy. Now, when you are engaging your 1/3 strategy, don't forget I said that I explained the other time that it may get to a point that you have introduced all the three parts of your money into the market and the market is still going low. At that point, you may choose to, if the market goes deeper, one part of it you can just take it and sell it off at a reduced rate. Yes, it appears you have lost certain amount of money on that, but it is not. When you sell at that reduced rate, most especially the one you buy, the last one that you bought, you sell it. Then you go, as the market goes deeper, you go and position down to buy lower. Let me give you an instance. Let's say that last part you introduced into the market when the market was selling at 10 naira and the market went down to 9 naira, 8 naira, and you have seen that the way this market is going down, deeper down. You can quickly sell at 8 naira and then go down to position to buy at 6 or 5 naira. If the market reach there at 6 or 5 naira, let's say you buy for 5 naira and it bounce back to 8 naira, you sell it. When you sell it, you have recovered the loss that you had initially and that you have even made profit at that point. That is what SLBBL is all about. Sell low, buy back lower. And that is what that is all about. The last I want to explain to you is called dollar cost averaging. Dollar cost averaging. This is more useful on the order book exchange. And this is how you go about that. Dollar cost averaging. The money that you are introducing into the market, don't forget, a part of your one third that you are bringing into the market. You are not also exposing everything into the market at once. That is what dollar cost averaging is all about. You can use, let's say, 2,000 to position at a point. Then you go 1%. You imagine that, let's say, the market dump 1%. You go and position 1% below that, and then maybe you introduce another 2,000 there. Then you go further down with another 1% to position in the market. Okay, you buy another 2,000 plus. So like that, then immediately you have done that, you will determine your selling price on the order book immediately. You set it there that once it buy this, this reach to this height, this price, sell for me, sell this for me. For the three level that you have bought, you must also set it in that manner. Sell order. You set your sell order in that manner. And as the market is coming down, going up, it will buy, it will sell for you. If it goes down deeper, it buy, it sell for you. That is what is called dollar cost averaging. And what that helps you to do is that you will spread your risk instead of also buying and introducing the whole money once into the market. That is all of that about dollar cost averaging. There are more techniques, but this is the four that I think as a beginner you can handle and you can relate with. Now, these things, you will not know them until you begin to use them, until you begin to put them to practice. That's when you master it. So I encourage you, if you want to enter into the space now, you are you engage these techniques and the strategy. Don't forget your strategy as well. With this, I have come to the end of this video, and I hope that you greatly have enjoyed the the training tonight. So if you have done that, if you like this video, you need to smash the like button, subscribe to my YouTube channel, and share this with your family and friend. Until I come again next time, enjoy your day. Thank you.